Today, we are digging into the latest financial statement from Wilton Resources Corporation, and wow, it is a story. We're talking about a company that's wrestling with some massive debts, a complete operational shutdown, and at the same time, this one huge external factor that could just change everything. All right, let's get right into it.
I want you to just look at this number for a second. That's over 729 billion Indonesian rupiahs. And no, that's not their revenue, it's not their profit. That is the company's deficit in working capital. In simple terms, that's the giant hole between what they owe in the short term versus what they actually have on hand. It's a truly massive figure, and it's an immediate signal of some pretty deep financial trouble.
A number that big, it doesn't just go unnoticed. It is a huge reason why the company's own independent auditors issued something called a disclaimer of opinion. Now, in the accounting world, that is a massive red flag. It's basically the auditors saying, look, there is so much uncertainty here, we can't actually vouch for these numbers. It's a really serious warning that the company's entire future is up in the air.
And all of this leads us right to our first big topic. That warning from the auditors? It's all about one critical idea in finance: whether the company can continue as a going concern.
So what in the world does going concern actually mean? Well, think of it like this. It's the basic assumption that any healthy company will still be in business tomorrow and next month and next year, to pay its bills and run its operations. When an auditor raises a red flag on this, they're saying they have substantial doubt about that very basic assumption. They're asking if the company can even survive for the next 12 months without being forced to sell everything off. So this isn't just some boring accounting term, it's a real question about the company's very survival.
So to really get how Wilton got into this spot, we've got to break down its financial performance. And the best place to start is right at the top, with their income statement.
It's a simple question, right? But the answer, well, it's got a few layers to it. Was it all just bad news? Not quite. Let's take a look at the actual numbers.
Okay, now this is where things get really interesting. Look at the top line. Revenue absolutely skyrocketed from 136 million to 926 million rupiah. And gross profit? That went from a tiny 3 million all the way up to 440 million. I mean, on the surface, that looks amazing. But then you look at the bottom line. The company still lost over 68 billion rupiah. Now granted, that's a little bit better than the 75 billion they lost last year, but it is still a massive, massive loss. So how on earth can revenue be way up while the company is still bleeding so much money?
Well, the answer is kind of hidden in the details. You had two big things pulling the company in totally opposite directions. On one hand, they got this unexpected gift. A vendor just waived a 6.5 billion rupiah debt. That's a huge one-time gain that helps the numbers look better. But on the other hand, there's this growing burden that's just eating away at everything. Their finance costs, which is mostly interest on their debt, shot up by 4 billion rupiah. This perfectly captures the company's struggle. Even when something good happens, the crushing weight of their debt just keeps dragging them back down.
And that brings us right to the heart of the whole problem: the debt. It's not just some number on a spreadsheet. It is the main character in this entire financial drama. And it all boils down to one single gigantic liability. And here it is, over 412 billion rupiah. This is what's owed for project financing to just one company, Karl Hoffmann Mineral. This one debt is the anchor pulling the entire company under. It's bigger than all their property and equipment put together, and it's the reason for those painful finance costs we just saw.
The story of this loan is a wild ride. I mean, it started out simply enough back in 2017, a $13.5 million deal to build a gold processing facility. But then things turned sour. By the middle of 2023, Karl Hoffmann was sending legal demands for payment, first for $2 million, then just a month later for a jaw-dropping $23.6 million. They did manage to renegotiate, but by 2024, they had to do it all over again. The end result, the amount they owe has ballooned to $25.6 million US, plus a painful 9% annual interest on top of it. Every single negotiation, every missed payment has just made this hole deeper.
So this is the official word from the company's report. They say they're in ongoing discussions to find an amicable solution. And this word is key because right now, Karl Hoffmann hasn't officially demanded immediate payment, but the debt is due. It's matured. So you can bet that the entire future of Wilton Resources really hangs on how these amicable discussions turn out.
So, as if a debt crisis worth hundreds of billions of rupiah wasn't enough to deal with, the company got slammed by a totally different kind of problem, something they had absolutely no control over, a total operational disaster.
Since December of 2024, the company's main project, the CMS Gold project, has just been hammered by the effects of La Niña. We are talking about serious natural disasters here. Insane rainfall causing flash floods and landslides. That in turn knocked out the power and destroyed critical things like roads and bridges. And the final result of all that chaos? The company's main engine for making money, their gold project, had to be completely shut down. I mean, you can't really mine for gold if you can't even get to the mine, right?
Now, there is a tiny bright spot in all of this. The company did manage to work with the state and get the power turned back on at the facility. But, and this is the really important part, the processing plant itself is still not running. Operations are still suspended while they do maintenance and just make sure the site is even safe to go back to. So even though the lights are on, the cash register is definitely still closed.
Okay, so you've got a mountain of debt on one side and a shutdown mine on the other. Things are looking pretty grim, but what does the future hold? Well, that brings us to the outlook, which is a real story of huge risk, but also, surprisingly, a ton of opportunity.
So this is it, right? This is the big question. Do they even have a plan? Is there a strategy to get out of this mess? Well, according to management, the answer is yes.
So here it is. This is the 5-point survival plan they've laid out, and it's pretty much a crisis management textbook. Step 1, find new money. 2, cut costs everywhere you can. 3, get better payment terms from your suppliers. 4, get the mine fixed up and running again. And 5, the big one, figure out a solution with Carl Hoffman. Honestly, just doing one of these things is tough. They have to pull off all 5 at the same time.
But here's where it gets really fascinating. Wilton's survival might not actually be all up to them. While the company is fighting all these fires internally, there is an incredibly powerful force out there moving in their favor. And it just might be the lifeline they desperately, desperately need.
And that force is the price of gold. I mean, just look at this chart. In less than 1 year, the price for an ounce of gold has just exploded. It's up over 47%. For a gold mining company, this is everything. Every single ounce of gold they could possibly pull out of the ground is suddenly worth so much more money. This completely changes the math on their entire operation. If, and it's a big if, they could actually get the mine running again.
And it looks like this isn't just a fluke. The report is setting projections that gold could climb past $4,900 an ounce in the next few years. So this isn't some temporary spike. It looks like a long-term bullish trend for the one thing they sell. And that gives a huge incentive for them and maybe for new investors to get that mine back online.
But then you see this, and it brings you right back down to earth. This chart shows where their money actually went in the second quarter of 2025. About 3.6 billion rupiah went to what's called general working capital, basically just keeping the lights on. And capital expenditures? Zero. A big fat zero. They spent nothing on growth, nothing on major repairs, nothing on making the facility better. They are in pure survival mode, spending only what they absolutely have to keep existing.
And that really brings us to the final critical question here. You've got a company with a suspended mine, a balance sheet that's just been crippled by debt, but they're sitting on a potential gold mine. Literally. In a market where gold prices are hitting historic highs. So can that amazing external opportunity, the price of gold, be enough to overcome all of the internal disasters? Can it bring in the new investment they need to pay off their debt and restart the whole operation? Or is the hole they're in just too deep to climb out of? That is the multi-billion rupiah question that will decide the fate of Wilton Resources.